Hello and welcome to Crypto Weeklies. In this video, we are going to analyze Cronos and its crypto ticker CRO. None of the content is financial advice. Over the last 24 hours or so, CRO has rallied from its recent lows of about 8 cents. Now the price action is coming close to 9.8 cents, almost close to 10 cents level. Currently the price has been bouncing from the lows that it has made since about October 2023, the ascending white line over here, where there were couple of tags to this line in February, then back in June of 2025. Now the price action is slightly above the moving averages of key interest. About the 20-week simple moving average is slightly under 9 cents, and the 21-week exponential moving average, this green line, at around 9.5 cents. The next level to look for, if there is a breakout over here, is the 0.236 Fib level at around 27 cents. If the price action were to go over here again, that would be from the current price about almost 3x, slightly under 3x from the current level of about 9.8 cents. So the next level is at around 41 cents. That's the 0.382, from where the major breakdown occurred in the 2022 bear market. As the 2022 bear market, there was a huge drop from that 0.382 level. So again, as the price action moves above the 20 cents level, the price action has not spent any time between this 20 cent level to the 41 cents level. Again, only a handful number of weeks over here, there is a gap over here. In terms of the current risk levels for accumulation per the regression based approach, the polynomial regression based approach, this is the color coded with respect to the risk level. Again, similar chart over here. Instead of looking at the from the 2019 or 2018 inception of the token, instead of looking at the weekly average, this is the chart on our website cryptoweeklies.com. the link on the bottom of your screen is looking at a daily price action, a daily average price, and using the polynomial regression based fair value for Cronos, which is right now coming in at around 16 cents. So right now, per this interpretation of the model, the price is undervalued. The risk associated is only at this point 3%. Again, if you look at this model and this model again, you can toggle off some of the risk levels, where let's say if the price action is too risky for DCA, again, anytime when the risks are less than 10% or for between 0 and 0.1, that is color coded in this price action is color coded in this purple region. Again, you can see this region identified most of the lows that Cronos made throughout the bear market and the recovery year of 2020, and ignored the high risk levels as the price action kind of grew in the bullish crescendo phases. If the opposite of the risk levels of interest is again looking for some distribution instead of accumulation, is the earliest starting point per this model is between 0.4 risk and 0.6 risk. Again, that is a conservative estimate of any major bullish rallies like Cronos enjoyed in 2021 December till about March 2022. Again, the end of the distribution phase was over here in the March to April of 2022. That's where the model identified that this is again in a high risk environment. Again, the higher the risk levels go, for example over here, identifying the risk above 0.8. Again, but there are no guarantees that every time in the major rally the price action does visit that 0.8 to 1 risk. So in a conservative estimate, it's between 0.4, anytime between 0.4 and 0.6, like the risk levels were in 2024 early November to mid-November to early December of 2024. The risk levels were higher than 0.45. And again, we made several videos related to Cronos on the YouTube channel back when the risk levels were slightly elevated, to identify and also identify the relative risk. Again, 7 months ago, 3 months ago, on the YouTube channel. Now if we were to extrapolate again, what could be the price action and forecast what could be the price action if the price action were to reach that 0.4 to 0.6 risk level. Per the model, it says that anytime when the price action reaches that 22 cents level, between the 22 cents level and the 30 cents level is estimated between 0.4 to 0.6 risk. The higher end is between that the price action target is between 0.3 or again between 30 cents and 47 cents. So lower end is between 22 cents and 30 cents. Again, that is kind of confluent with that analysis at point slightly higher, that at around 0.23 fib level. The last time around, again, the price action did try to come close to the 0.23 fib level at around mid-November 2024, but failed to reach that level. So let's see if in the last half of the 2025 post-halving year, if the price action were to go to that level per this model. Again, another way to identify, again, if there is a euphoria in the market, is this dotted red line, that is 2 standard deviation residual to this polynomial based fair value. Again, this is a very pictorial cutoff point. Again, as the price action kind of gains proximity to this dotted red line, that's where major peaks kind of have historically occurred per this model. Again, the equal and opposite is whenever the price action gains proximity to this dotted bottom regression dotted green line, that's when DCA makes the most amount of sense. Or you can also look at these color codes when the color codes are again not financial advice, when they are in this low risk environment. Again, that's where DCA made the most amount of sense historically speaking. Again, right now the risks are between that 0 and 0.1 risk level have been for the most of the point since early February 2025. For the most of the last 3 to 4 months, risk levels for Cronos have been died down. In terms of the simple moving average based risk for Cronos, the 20-week simple moving average price based risk levels for Cronos. Again, this is the price color coded with respect to the risk levels. Right now the risks are slightly elevated, around 22%. If they were to go to that intermediate target like they visited in March and November 2024, and also in December 2024, this risk between 30%, again peaks were at around 35% or 0.35. Again, one more slightly elevated at 0.4. So between 0.3 and 0.4 risk, what is predicted is price action between 30 cents and 37 cents is considered per this SMA model as a good price target for as a forecast for Cronos without any euphoria in the market. That is, again, those were some of the intermediate peak where there was euphoria for Bitcoin over here, where Bitcoin kind of broke out. But again, altcoins as a narrative, you can see if you were to look at the total, this is the total 3 ES. That means everything in the top 125, excluding Bitcoin, ETH, and the stable coin. How the altcoins are performing since May 2021. You can see this is how they are performing relative to Bitcoin. There is this well-defined range where on this descending series of lower highs and lower lows, when the bounce usually occurs to either direction. Again, a bounce or a crash occurs when the prices are or the valuation of altcoin is over here, where it's overvalued on its Bitcoin pair, and the white line is where it's undervalued on its Bitcoin pair. Right now, the price action is more than halfway from the overvaluation phase. It's closer to the undervaluation phase. Right now, it's around close to that 0.28. That means, again, if they were to drop to this level close to that 0.25, that means altcoin cap is again, at least the top 125 altcoin cap is lower than 1/4 of Bitcoin's market cap. If that kind of scenario were to present itself again, there have been a series of lower lows throughout the 2022 and 2023 as well as in 2024. Now you can see the if we were to draw a straight line over here from the 2023 lows and try to look at the current price drop in that perspective, you can see the prices now are much lower than what they were once in 2023. You can see this line helps identify some of the support that altcoins enjoyed against Bitcoin has now broken away since June 2023 to now, first time in May 2025. Let's see if there is a continued breakdown in altcoins, if that kind of occurs. And again, if from the other side, if from some low point over here close to that 0.25, if there is a rally to about 0.4 level, that in that kind of environment, cryptos such as Cronos could benefit. Again, that is just interpretation of these models. Cronos right now, if you look at some of the top rallying cryptos, is I think again number one spot over the last 24 hours. Market cap is about 3 billion, but the area of concern is that the total supply is not fully released yet. Right now, the market cap based ranking, it's ranked number 31st. Almost 100 billion cryptos are in that's the total supply. 100 billion is max supply over here. Only 31% of the max supply is released. So again, there could be a divergence between the price growth and the market cap growth. You can see toggling between the price chart and market cap chart. Again, not one and the same. Market cap has grown a lot compared to the price. That means there are new token getting unlocked, which is again not too surprising with this kind of tokenomics. So coming back to the price forecast, between 30 cents and 37 cents is per the SMA model. Per the regression models, between 22 cents and 30 cents is kind of predicted. The time weighted average price based accumulation for Cronos again says that the prices are in accumulation territory as the price is lower than the time weighted average price presented by this blue line. Whenever the price, historically speaking, is lower than this blue line, especially for assets which have a chance to rally in the bullish phases of the market, such as in March and December 2024, where the price for Cronos rallied above the time weighted average price. For those kind of assets, accumulating below the time weighted average price per this model, at least historically speaking, has not been the worst idea. So anything below the 12 cents is kind of the line in the sand for Cronos at this point per the accumulation model. If we were to look at the estimated bull run target for Cronos as a confluence of this three targets, individual targets, with the hypothesis that Euphoria could eventually catch up to the crypto market. That means the risk levels, which are right now 2%, 0% and 20%, were to be collectively at 95%. That means the weighted risk, which is right now at 5% or 0.05, if that were to go to that 95% target towards the Euphoria peak in the crypto market, where all of the models exhibit equally risky environment for this asset, the estimated bull run peak could be at around $1.80, which is about a 20x, roughly speaking 20x from the current price action of about 9 cents. Again, the preconditions are all of the models going to that highest risk levels. Again, realistically speaking, one could make the case that 95% for all the three different models at one point is harder to achieve. So if you were to divide this by half, that would be at around 50% risk for all, weighted risk for all the model. That could bring the price action forecast at around somewhere between 90 cents. A 60% would be somewhere between 90 cents and $1.10. So that could be where, again, the previous all-time high for Cronos in at least in 2021 was at around 99 cents. Again, visiting and or exceeding that high could take the price action somewhere between $1 and $1.20. The 1.618 is all the way at around $1.60 for Cronos. So with that I would like to conclude the video. Hope you enjoyed the content. If you did, please give us a like and subscribe, and hope to see you again tomorrow. Thank you and have a nice day. Bye bye.